Away from that then, and try to go on a website and book for a holiday towards the festive season or towards the end of the year, and chances are that you'll be paying very high rates. It clearly seems that occupancy growth is back and with quite a vengeance, and one of the largest vacation ownership company in the country, we've got Mahindra Holidays in the spotlight. Kavinder Singh is Managing Director and CEO now joining in. Thank you so much for taking time out. I'm just going to take off from a comment that had been made by Dr. Anish Shah, the Group CEO. Recently he said, while Mahindra Holidays has a strong business model, it needs to take bold actions to capture the opportunity of exponential growth beyond the current 20 to 25%. So tell us, Mr. Singh, what are the kind of bold actions that the company is prepared to take in order to achieve this growth?
It's a very valid statement given the current circumstances. As you know, that the leisure is on a boom, and we expect that this cycle to last for at least till about 2030, as much as we can see. And I think this is the time, given our strong balance sheet, given our strong business model, for us to make big bold moves. So as we speak, you may have also noticed that during the COVID, we added about 800 rooms. So we are accelerating our inventory additions. We already got a kicker in terms of our resort revenues. We clocked 84 crores, which is the highest ever. Occupancies are looking robust, and as a result of which we are encouraged to do investments as well as taking resorts on these to grow our core vacation ownership business. And we are also very, very confident that the member growth will follow. And as we speak, the quarter 2 is looking good, particularly with regard to occupancies, and quarter 3 again very robust with regard to occupancy.
Okay, that's a broad statement, Mr. Singh. Walk us through what it is currently at in terms of the overall occupancy that you're looking at on average. What is it expected for Q2 in terms of numbers, and what is the kind of average pricing as well that you're looking at?
So in our business, since most of the people who holiday in our resorts are our members, so the average room rates do not matter much for us. A very small percentage of our inventory goes out. There the average room rates have risen sharply, but more importantly, if I were to look at it, the food and beverage spends are up. Our occupancies in the month of July touched 81%, which is the highest ever that we have seen in a month like July, which is actually an off-season month. August, we clocked at about 78.5%. And as we look at September, we will close the whole quarter above 80%. So this quarter normally is a soft quarter from occupancy standpoint, but we will still be at about 80%.
The numbers certainly sound very encouraging. Now, I just wanted to also understand what the outlook is in terms of HCRO, because the contribution has been fairly trivial since the acquisition. Now, analysts are saying that to recoup investments, Mahindra Holidays will be open to a strategic stake sale. Is this something that you're going to consider?
So, at this point of time, I would like to mention that Holiday Club Resorts has a very, very strong management, and they are driven to create significant value for themselves in the Holiday Club Resorts as well as for us. As we speak, the Holiday Club Resorts actually delivered a fantastic performance in quarter 1. If you look at our consolidated results, our income grew by about 50% and EBITDA grew by about 75%. So that was, of course, aided by Holiday Club Resorts. July, August, September again is a good holidaying season. And as we look forward, yes, there are pressures on the price rises due to the energy inflation over there, but we will keep an eye on that. But let me tell you one thing, that as far as we are concerned, we see ourselves as strategic investors in that business. We have built the business to a point where when we acquired the business, they had 50 million euro debt. They are down to 20 million euros. So the company is in a good position. So at this point of time, our idea will be to take the best advantage of the Holiday Club Resort strengthening position into the future.
Kavinder also wanted to understand, we believe that you're planning to acquire further properties to add to your inventory as well. What kind of acquisitions are you eyeing, and who is it that you're in talks with once all these acquisitions materialize?
So when I when we talk of acquisitions, we are looking at property acquisitions. We are looking at property acquisition in India. There are a few which are very active in consideration. There is a due diligence process going on. Obviously, till the time the process gets completed, I'll not be in a position to share the name of the property, but these are marquee leisure properties. As well as we are looking at properties in Southeast Asia, because we are actually preparing, as I mentioned, for a big boom, and we know that leisure is not going to go away. In fact, we have become stronger during the pandemic. Our cash position is extremely good. So we are definitely going to deploy cash to acquire properties. We are going to deploy the cash to actually build new resorts, and we are also building our land bank as we speak.
You know, the other thing or aspect of growing at such a run rate is also that you witness a significant rise in your debt levels. Also the cyclicality also, you know, which has hit the entire industry much more negatively. But wanted to understand what debt levels and what cash and cash equivalents currently are you sitting on your books?
You know, the good news for us is that our business model actually solves two fundamental problems of hospitality, which is debt. We are a zero debt company at a standalone level. And the other one is cyclicality, which you were talking about, which is about occupancy. So we are actually, you know, for us, a stable rate is about 80%. On the peak season, we go up to 85%. And in fact, in April, May, June, we went up to 89%. So for us, these two problems, which are typically faced by the hospitality industry, actually are not faced by us. Part of the reason is because of the business model. Second, our business model generates free cash flow. So therefore, we are able to fund our entire growth through the internal accruals itself. Talking about the debt, as I mentioned, we are zero debt. And as far as the occupancies are concerned, we are expecting stable occupancy even into the future. And even with these levels of growth, as I mentioned, we added about 800 rooms. We still were able to fill them up to 90% level in April, May, June. So we believe that the space that we are in is extremely sharp. We have a very strong position, and this is the time to actually go and accelerate even further without really worrying about what can go wrong, because I don't think the position that we are in, unless we actually do a bad job of execution, which our track record shows that we haven't. So I think we are on a good wicket.
You're on a good wicket. Things are looking good by way of acquisitions, acquisition pipeline in Southeast Asia. Your occupancy growth as well has been strong. Thank you so much for highlighting those details. That's Mahindra Holidays for you. But let's shift gears then.